Hey everyone, I'm Stephen Kalayjian and welcome to Back to the Futures, our last show for 2024. Looking forward to 2025. Well, the key for the market in the last week, I'm going to bring up the daily on the underlying ETFs here. Let me just change this to the daily really quickly here, and I'm going to show you the daily, the 1 day. This is the pattern that I wanted to show everybody here. I don't know if you can see it here on the big screen here or not, or better yet, might as well just do it from here. But you can see this is the pattern. I call this deep oversold condition. We rallied, and you can see the MACD is negative right here, blue over yellow above the pivot line. And when you have something like that right there, okay, this is a monster bear flex. We went from deep oversold. We were trading 58.65, I believe, on the S&Ps. We rallied up 200 handles, and we got the Qs got up to the 531. The spiders the 601, 602 level, and then look what happened. Monster bear flag right here, and we got caboosed. I called this short off the bigger time frame. I said be looking for a move down, and that's exactly what we had. So we had 200 up and about 140 down here. Now the move's not over 100% here, okay? So I'm still looking for this daily to get oversold here, get to a deep oversold condition, probably by Thursday or Friday of this week. And I believe the following week, beginning the first week of the full new year, I believe the market should start rallying very, very aggressively here. And and what I want to see is these MACDs positive from below the pivot line. I want to see them go below the pivot and then cross up. And I think that's what's going to really fuel the market here. I'm still looking for 6250, 6500. Probably I'd like to see 6500 by the first quarter. Just now, we had a monster rally, 30 up and 30 down on the S&P, or roughly 25 up and 25 down. And I want to go back and show you what I saw here on that just now during my my live stream here. I want to just show you the time frame here, if I can get it. Where's the time frames here? Where's the time frame here? 15. Let me just switch here. Okay, switch this to the 60-minute. Well, we have the 60-minute right here. Okay, 30 and 60. So here it is. We were deeply oversold here. So when we got this push down earlier, this right here, okay, right around here, we had a 2 oversold condition on the 60-minute time frames on the Qs and on the spiders. And when we got this big push up, the S&Ps were trading roughly around the 22.5 level, the 23 level. And then we got this monster move. And when you see the move on the when you see the move on that, we got the S&Ps went from 22.5 all the way up to 51 level, and here we go rallying again. And then when we got this push up here, let's look at the 5 and that's the daily. Let me just switch this over to the 5-minute here. You see this push up right here, okay? This is the first bounce on the 15-minute time frame. So we went right into the 10-bar weighted moving average. A monster long there, okay, then followed by getting out, and the spiders were trading right around the 587.5, and they dropped 25, about $2.50, $2.60. Now, you know, I told you that when you're using trading the continuous contracts, okay, you want to be able to look at the underlying ETF. So the S&Ps, as they were pushing up, my eyes shifted immediately over to the spiders. I saw that the spiders reversed the sell on the 15, and it correlated with the 30-minute and the 60-minute time frame. So when you got that push up on the spiders on the 15, and it correlated, that 110, that 115 bounce, when the S&Ps hit 50, They dropped 25 on the S&Ps. That was a monster push up. And so when the 15-minute reversed to sell, the 30 correlated with the 15, the 30 correlated with the 60-minute on my indicator 4. Then you look to short the first bounce on the 15. That's exactly what happened. This is an absolute Picasso. Now, not only is it the first bounce, but look at the MACD negative on the 15-minute time frame. This is an absolute Picasso. You got the oversold condition, okay, the overbought condition into the negative MACD. You can't ask for anything better than that in my book, okay? You can't ask for anything better than that. That, to me, is an absolute winning strategy, okay, where the 15s reverse. It correlates with the 60. When the 30 reversed to sell, it correlated with the 15 and the 60. You wait for the first bounce on the 15-minute time frame. You see the negative MACDs. You got the overbought condition into the negative MACD, and boom, hit like a brick wall. 50, everything dropped. Microsoft dropped 2, Apple dropped 1, Meta dropped 3, Nvidia dropped $1, PLTR dropped 80 cents, Amazon dropped north of $1. I think we're going lower. I think we're going to go lower come Thursday and Friday, or sometime make a bottom on Friday or early Monday morning, and then I think we go right back up. Okay, beautiful patterns there. Okay, so right now what we're looking for, okay, I want to see the 15-minute time frames get one more push down here. Maybe we make new lows into the teens, mid-teens to high teens on the S&P. On the NASDAQ as well, maybe we break the 21,200. We get into the high 80s, low 90s. And I think then we get one more push up here. Now, it really is a testament to watching the market in such a way that we're able to trade the market effectively in such a way that will give us the best results, right? So when you're looking at the market and you're seeing the moves here, right? The moves are very fast. I think 2025 is going to be a year of volatility up the wazoo, okay? And for those who you need to apply stops, you need to be able to have risk management. You need to be able to recognize the patterns and understand the patterns for what they are. Okay, and that's what I teach every single day during my live stream. It's really important that each and every one of you can identify these patterns. I wanted to show you, if I can bring this up here, the SDSs here, the Pro Ultra Short. Okay, now you see this here, this deep oversold condition right here. Well, that deep oversold condition on the 5-minute time frame set up the long on the 15 as well. So as the S&Ps were pushing up, I showed you the inverse. The spiders were getting overbought into the negative MACD. Well, now you had the overall pullback on the SDSs into the positive MACD, right? I always look at that. Boom, it confirmed it. I have one on top of the other, and there it is. Now, what's important, okay? Oh, my God. What's important is that when you're trading, you have your charts lined up appropriately. And I told you the most important thing is you have to look at multiple time frames, the 15, the 30, and the hourly time frames. And when you're trading the indexes, the S&P, the Russell, the NASDAQ, the Dow futures, the gold futures. I mean, gold just had a beautiful pullback on the 15-minute time frame, and gold just ripped like $3.50, $4 out of nowhere. Sell divergences just now on oil. Oil just dropped about 16, 17 on oil. We had that short there. Gold, beautiful long on the gold, just ripped about $3.50 on gold. And again, it's important based upon my research when you're trading to look at the underlying ETFs and be cognizant of trading the markets in such a way that's going to give you the best opportunities, right? That to me is where it's all going to align. And when you're trading the markets, what you want to be able to do is to see the underlying ETFs and then use it as a tool if you're not going to trade it, but assist it in your trading in the actual indexes. Okay, that is exactly how the game should be played. And again, like I said, I've been doing this for a very, very, very long time. So I think it's just prudent for you to understand the market moves, the market direction, and to be able to recognize uh, the, uh, the opportunities based upon looking at the markets in a way that will give you the best chances of being constantly being consistent. All right. So again, the 60-minute time frames, beautiful, long. Set up the short on the 15. I'd like to see one more flush down. Right now, there's about $700 million to sell on the bell. Yesterday, when that happened, the S&Ps dropped over 20 handles at the end of the day. So we're gonna just see patiently here how that's gonna unfold. All right. With that, it's really important, okay, to look at the reverse ETFs, okay. So as I just showed you the SDSs, okay, let's look at the SQQQs, okay. So look at the SQQQs, identical, same pattern. You can see the MACDs are positive, very strong here. The ADXs are rising, good buying pressure, okay. And when we got that same oversold condition that I showed you on the SDSs, what happened? Boom. The SDSs, the SQQQs, the SDAOs, the TZAs, everything lined up perfectly on the reverse ETFs. On the long, which set up the short on the S&Ps. The NASDAQ futures dropped, dropped about 100 points on that. The S&Ps dropped 25. So when you align yourself looking at the underlying ETFs and using the underlying ETFs, and I told you I've taught this to some of the top hedge fund managers in the world, okay? You being able to utilize the continuous contracts on the S&P aligned with the underlying ETFs, or the continuous contracts with the underlying ETFs, and then use the reverse ETFs as another way. I'm telling you, to me, there's nothing better. And I've spent years and years and years researching this, and now I'm teaching it to everybody in my community, and I'm also teaching this to you here. So if you get my chart overlay, again, I do a live stream every single day from 9 to 4. But if you guys, anybody has any questions and you want to be able to contact me, my number is 914-500-7484. Okay. Let's see. All right. So it's important, right? It's important for each and every one of you, okay, to recognize, to be consistent, right? With the volatility that's happening, even on a slow day, people say to me, oh, I'm not going to come in the day after Thanksgiving, the week of Christmas. If it falls in the midweek, it's going to be that week. Are you kidding me? These are the best days I've ever seen. I've been doing this now over 41 years, and I can tell you, I can't remember a day that after Thanksgiving or on a week where there's a holiday, like what we're experiencing this week. Christmas fell on a Wednesday, Monday, Tuesday, Thursday, Friday, right? It's been Monday, Tuesday, right? Insane. New Year's falls tomorrow. So yesterday were insane, and I expect Thursday and Friday to be the same. People are like, oh, it's slow. It's not worth to be here. Not worth to be here. The volatility is insane. The S&Ps are moving before 11 o'clock. They were moving 10 handles at a clip. Boom. But I want to show you something from this morning that I noticed, and I wanted to show this to everybody here. If you see here early in the morning, okay. Wait, that's the 5 and the 15. Let me just bring up the Qs then. This is the 30 here. Let me do this one. Okay, look at the look at the Qs here, if you can. Look at the Qs here. You see the rising ADX on the 15-minute time frame. That means a trend is in place. That means a negative trend is in place, right? And we were definitely short here. Okay, so the Qs actually reversed to sell on the 30-minute time frame, right? Correlating with the 15. So the Q's reversed, correlating with the 15, and then the bounce at 110, and also correlated with the 60-minute. Here's the interesting thing. When you see these patterns here like this, right? When you see this negative selling pressure, the negative MACD below the pivot, and see the rising ADX like this right here, okay, what do you recognize more than anything? What you recognize here, okay, is using the smaller time frame, the 5-minute time frame. So right around here at around what time is that? 11:50. Okay, here was another one. Look at the rising ADX. All these bounces on the 5-minute time frame with that rising ADX on the 15 is, and look at the rising ADX on the 30. We're setting up shorts on the smaller time frame, the 5-minute. Okay, so again, what's important is that when you're trading the markets, you want to be able, okay, to recognize the pattern, recognize the using the smaller time frames for entry and exits. Okay, and I just want to show you, like for example, the GLDs just got oversold into big buying pressure, positive MACD. The ADXs are rising on the 15 and the 30-minute time frame. Beautiful pullback on the GLDs, and then gold just ran about $4. These patterns repeat themselves over and over again. I've been doing this for a very, very long time. But again, it's up to you to have the confidence to be able to learn, put the time and effort in. And if you do that, I truly say this from my heart, if you do the work and you study and you learn the patterns repeat themselves every single day. And it's important that you recognize how these patterns move and how you could benefit in the trading world. Everything I do is based upon buy and sell divergences. I told you I have 5 conditions: a trend, a buy reversal, sell reversal, a correlation, and a disconnect. Of the 5 conditions, you have 2 strategies for each condition. So you have 10 strategies, 5 conditions, 10 strategies, and the 5 keywords: consistency, discipline, confidence, patience, and passion. Last night I got up, I went to bed early. I got up around 1 o'clock. I called my friend in California, which is 10 o'clock his time. And I was talking to him, and he's like, oh, I don't have the patience to do, I just get right in. I said, no, you have to wait patiently for the pattern to set up. Because if you're not patient, and let's say, for example, you could just get steamrolled on the most unbelievable pattern, but you're in early. You have to wait for the pattern. So, for example, at 110, when the S&Ps were trading at 50 just now, and the NASDAQ was trading around the 21,330, I said, this is the time I would be looking for shorts right here, okay, or for the 15-minute time frame. So what's important, okay, what's important is everything you do is discipline. You need to have stops in place. You cannot trade without stops, and if you're trading, there's a big difference between limit stops and market stops. I never traded with a limit stop because in the fast market, if it goes right through your number, it becomes a bid and or an offer. It doesn't really do you any benefit. Everything is all basically, what I've ever used was always market stop orders, okay? Never a stop limit on a buy or a sell. What else? Okay, we have about 10 minutes, 11 minutes. Does anybody have any questions at all? Anybody? Does anybody have any questions? Okay. All right. Did you, it's again, like I said, okay. Again, the S&Ps right now, okay, we got to see now these 60-minute time frames are what's keeping the market from really getting absolutely kabooshed. When S&Ps were pushing down earlier, okay, these 60-minute time frames really, really, really pushed up to the point where we rallied like 25 points like that. And the reason why we were a deep oversold condition, we were a 2, on the oversold condition on the 60-minute time frames on the Qs and on the spiders. So that's really, really important. And I saw that, I identified that, and a lot of our members in our community took advantage of that long. And you blinked. I said, I'm looking for 10, 8 to 10, 15. And they went from 23 to 38, 37, 38, like that, exactly on the 12:30 bar. Okay. So again, it's all predicated on, I have my bigger time frames here. That's how I have my room set up. And then I have the 5 and the 15 here with the correlation with the continuous contracts with the underlying ETFs. I don't need to look at the bigger time frames because I take a picture in my head. I know the 30s and the 60s are negative. I know the 60-minute time frames are oversold. And even we got a new flush down. But again, it's all predicated on how you're going to trade the market and the most effective way to trade the market. Okay. Right now we have a double red short, meaning on the S&P futures right here, the 5 correlated with the 15. I should have just taken that short just now up at 37, and they just dropped 5 points on the S&P. So whether you're trading the 5-minute on that pattern, that's a really great pattern. The 5-minute time frame on the algorithm reversed to sell, it correlated with the 15, and then you just take that short right there. And I think the high was 37.75, and just dropped 6 handles on the S&P. When you have volatility like this, to make 5 or 6 or 10 handles a day should not even be an issue. The NASDAQ just dropped 23, 24. Okay, so again, it's all about just hitting singles and doubles. If you're going to look to hit home runs, this is not the place to be. S&P's just dropped 7 just now. Okay, it's important that when you're trading the markets that you recognize the true importance of the amount of trades that you could do a day. On the continuous contracts, my research tells me you'll get anywhere from 8 to 16 great patterns a day. On the continuous contracts, because more data, but on the underlying ETFs, you'll get anywhere between 4 and 6 great trades a day. Most likely 2 on the 15 and 4 to 6 on using the 5-minute, 3 in the 5-minute time frame. So that's really important as well. What else? Crude just got absolutely kabooshed there. Okay. Okay, let's see here. Okay, does anybody have any questions at all? Again, this has been a great year. I think 2025 is going to be significant volatility, especially we have a new president coming in here. Markets are going to be really wild. I think that the volatility is going to be really going forward, coming probably, I would say Thursday and Friday will be just like today, where you'll get these really big moves up and or down on the contracts. But come January 6th, that Monday, bam, out of the gate, we're gonna be. I'm telling you, I think the markets are gonna rip roar here, and I think we're gonna have some really exciting times. I love the futures markets. I love doing this show each and every day. But again, it's really a testament, okay, for all of you to really be engaged, and that's what's really important, to be engaged in the markets, to be engaged in taking the initiative to to take the strategies, learn the strategies, identify the patterns. There's a double red short. I didn't call it because I was busy talking. I saw it. I should have called the short above 37. And every time I do a range, I do like a 5-handle range. So 37 to 42 with a 44 stop. So if you're short at 37, it drops at 35. You could lower your stop to 37. If you look at the SDSs here, I gave the complete inverse here. The SDSs reversed to buy on the 15. Okay, when the algorithm is above the pivot here like this, you look to take the short, which is the long. Okay, you take the short here on the S&Ps, and then you see the pullback right here. Okay, you see the long. This is the long I actually called before when the algorithm reverses to buy and the MACD is above the pivot. You take the long on the S&P, and then you get the pullback, and then there's the short at 37. Here's the 5-minute getting oversold. Now this may have ran from 63 to 70. The S&Ps dropped 7. So this actually confirmed this pattern right here would have confirmed the short on the S&P. Beautiful pattern there. What else? Okay. All right. We have about $700 million for sale on the sell imbalances. Now that doesn't seem like a lot, but yesterday the S&Ps moved about 18 to 20 points at the end of the day. So I think, again, with this pattern on the daily, I think we're going lower. Today, obviously, we're down 28. Thursday, maybe Friday, we do a short-term bottom. I want to see these MACDs go below my pivot line, and then I think we can be up and away in early to mid-January. I think we're going to blow through the old high of 61, what was it, 61.55 or something like that. Again, I like to see the market move to the 63, 65. Now, I've been in the game 41 years, and I never had a bad tick on the continuous contract. I always had bad ticks on the underlying ETFs or individual name stocks. And I never seen this before. I had a bad tick of 65.50 on the S&P. So technically, I think that's where they're going eventually. S&Ps just dropped 9 here. So with that, again, beautiful pattern, right, off the 15 here. Again, 15 reversed to buy, correlating with the 30 and 60. Wow, look at the S&Ps drop 10 here. Okay, beautiful short. Beautiful short on the spiders, on the double red. Okay, beautiful at the 150 time period. Beautiful short on the double red. So the 5 correlated with the 15, the 30, and the 60, and there it is. And the SDS's beautiful pattern on the inverse on the SDS's. So the SDS is confirmed. If I was to take that short on the S&P, 37 down to 27, even if you caught 5, you capture this. If you can make 10 handles a day on the S&P, that's a pretty damn good living, if you ask me. Okay, that's a pretty damn good living, if you ask me. All right, does anybody have any questions at all? All right, I want to say thank you for Tradier for giving me this opportunity to be here on Tradier Hub. I'm really looking forward to 2025 and teaching all of you. If any of you don't want to ask a question here, but you want to text me, my number is 914-500-7484. I want everybody to be consistent each and every day. Most important, coming into the new year, set your goals. When you hit your goals, you stop, learn, keep learning. When you hit your goal, you paper trade. If you want to learn from me, I do a live stream every day from 9 to 4. If you want to contact me, again, my number is 914-500-7484. I want to wish all of you a happy and healthy new year. God bless, and God bless the United States of America. Be well, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.